All righty, sounds good. Hello, everyone. I am Josie Harris Walton, tax attorney, and we're going to talk about my favorite subject tonight. Woo, everybody know I love myself some tax repair penalties, due diligence, criminal and civil penalties. And then we're going to go into it deep tonight. So thank you guys so much for tuning in, and let's get started. How's everybody doing? How's everybody doing? Hey, I'm so glad. Y'all come on at 7 o'clock at night. I love it. You got to be dedicated to be here at 7 o'clock at night because you could be doing something else. But so I love it. So thank you guys for tuning in tonight. All right, let's begin. Again, I am Josie Harris Walton. I will be one of the trainers, the amazing instructors for the EA Bootcamp in Las Vegas. I am so excited. I got my room booked. I don't know how to act. Man, I'm so ready to go. I was like, oh, can we go now? But we gotta wait till June the 11th. So let's get started. All right, so we want to understand tax preparers, penalties, civil and criminal on an enrolled agent exam. I love the fact of 4/4/24. 4/4/24. Y'all know what time it is. 4/4/24. So, I know that some people are going to be, maybe still preparing taxes. So we're going to talk about the due diligence. And then not only that, when you're dealing with the penalties, you may have to represent people as well, tax professionals. So we want to make sure you understand, because I think it's part 3 of the exam. That's where the penalties come in at. So we want to kind of talk about some things you may see, some questions you may have. And of course, the amazing Melinda will be giving you guys some poll questions. So here we go. See, and she represents some right now. So, you can represent tax professionals because you can represent anyone in the IRS, against the IRS. So, and I mean, I really don't do them as much anymore. I do the appeals on them. But so when you come in EA, I'm just going to send them over to y'all. I'm putting my list together, people. I got to send them all my referrals over there because people keep me busy with this criminal investigations. And we're going to talk a little bit about those as well and give y'all some scenarios. So we already did the introduction. We're going to talk about the enrolled agent exam, the overview. We're going to talk about civil penalties, due diligence requirements, a little bit of Circular 230, and then criminal penalties. And then I'm going to let y'all go. All right. Sharon says it's muffled. Is anybody else muffled? Can everybody else hear me good? Okay. Sharon, it may be you, baby. I don't know. I'm sorry. All right. So, like I said, it's part 3, representation practices and procedures. That's what's going to be on the exam. So you guys know I'm going to go into this deep in Vegas. But right now, I'm just going to give you a little bit and let you know what you're looking at. So pretty much, the IRS addresses the penalties for tax return preparers, as well as abusive promoters, as well as fraudulent tax returns, as well as incompetent tax returns, abusive transactions, penalties for noncompliance, due diligence penalties, sanctions, and criminal penalties. You never know what you may get on that exam. So you need to know all of this because everybody know I always talk about due diligence, right? But it's going to be way more than due diligence on here because you have more things to due diligence. I don't even know if you guys knew, and I'm pretty sure some of y'all probably did, but if you do offer and compromise, if you put fraudulent information on offer and compromise, that can create a penalty. And we're going to talk about that because I know that's some of the things that you guys do with it, which is OICs. And so it will create a penalty if you don't put the right information on there. So these are some of the things right here. So this is so important that you really tune into the civil and criminal penalties and the sanctions, because you can have all these things on here. Civil penalty, all kinds of things that can create a tax return tax preparer's penalty. I think Melinda said it best when she said it in her post, like they are making money, bukus of money off of preparers, off of these penalties. They are making bukus of money because not only do you get a civil penalty, if you get a criminal investigation, you may also have a criminal penalty. So they want you to pay a restitution even though you're in jail. It's another stream of income all the time. So that's what they're, and not only that, they penalize your clients too. But I think someone already talked about that. But this is huge right now. It is huge. And I mean, every day I'm seeing people with due diligence penalties, or not just due diligence penalties, but fraudulent penalties, or not preparing, not signing the return, or not giving a client a copy of the return. Those things are penalties. And they're up to, like, right now it's going up every year, because the due diligence penalty is like $600 now. And the disclosure penalties are like $60 now, up to $30,000. So this is huge. So you want to make sure you know exactly. So when you are taking the exam and you see one of these questions, you got to make sure that you are looking at, if it says like, because of like 2024, it is now a certain amount of money for the penalties, and we're going to talk about those amounts. So what's the definition of a preparer's penalty? Because you want to understand when you're doing when you see a question, you want to understand why. How can the IRS regulate this? Enrolled agents who get paid for preparing returns may owe preparer penalties for non-compliance. But also, if you're representing someone, you need to know that as well. As well as there's other things, like I said, offering compromise, or you don't get the information you need to verify offering compromise, or it's another one, the agreements with tax liability. You can get a penalty for those. So you got to understand what these penalties are about and why they are these certain ways, because we do have all the time, like I said, this is what I do. Prepare penalties, civil and criminal. So we're going to talk about the different penalties, because these are the main ones: 6694 and then 6695. 6694 is these are your kind of regular penalties, and then 6695 is what everyone knows. Those are your due diligence penalties. If you've been prepared before, and I know all of you have, those are the due diligence penalties, and we'll get into those as well, because you want to understand that, because we always talk about in the exam, it may trick you up on something that it may say, we're looking at what is the penalty for 2023 for due diligence. Is that 600? It could be it's 560. So it may not ask you that, but I'm just saying, just in case it trips you up with things like that, because we know how the exam works. So 6694 penalties, these are understatements due to unreasonable positions. If you put an unreasonable position on someone's return on a line item, you can get a penalty. Understatement due to willful or reckless conduct. If you pretty much put someone on there, like let's say they said that they had a Schedule C, or they didn't have a Schedule C, and you put a Schedule C on there. Or they didn't have a Schedule E, and you put a Schedule E on there, and the client says, I didn't tell them to do that, because y'all know clients will throw you on the bus. So Melinda's ready to do a poll real quick. Which of the following is an invasion of tax? Ooh, that's a good one. Ooh. Which one of the following is an invasion of tax? Purchasing tax-exempt bonds instead of taxable private activity bonds, paying employee wages in cash, assigning taxable income to a child's tax return, paying reasonable wages to child hired into the family business. Which one of them you think is correct? Which one of them is invasion of tax? Let's see if anybody got the answer. So somebody put some answers in there. Is C, assigning a taxable income to a child's tax return. Assigning taxable income. Look at that. Okay. Y'all are doing good. Somebody been listening. What? Okay. I love it. Promoting abusive tax shelters. Everybody know those are the different tax shelters you have, as well as understatement of tax liability, which understating someone's income. If they have a Schedule C and you understate the income, you can get a penalty for that as a preparer. Also, people you represent can get a penalty for that. Fraud and false statements. And I got that promoter down there. I do, George. I'm talking about that promoter. And disclosure of use of information by preparers' returns, fraud and false statements, fraudulent return statements or other documents, knowing or reckless disclosure of use by preparers, impact of penalty on taxpayers' practice and reputation. And that promoter penalty. I think I got it on there somewhere. It's on one of these. I think it may be on one of these about the criminal issues, because that's when I see it a lot on criminal investigations. But promoters, you guys know those PPP loans, those ERC loans, those fuel credits, those what else I'm thinking about? Oh, this year's a good thing, them 1099 DIVs. Federal I forgot about ERCs. If you are promoting those, and you are not just, and you, promoters is, y'all understand, promoters is not just the fact of, okay, well, I told them, I know, right? I did it for them or whatever, and I'm done. No. If you did some of them and you were promoting that and you knew it was wrong, you knew that person didn't have, like, ERC is big. You know that person did not have employees, but you still did a 941 for them, 941X, and you got them employee retention credits. I am going through, well, actually, it's the PPP loan I'm going through. Got a client right now that the FBI is investigating. The client did, she told me she only did 100. And I'm going to say she because it's she. She only did 100 of the PPP loans. She said that they gave her the information. They told her that they had, these income and all this stuff. And she said all she did was put the information in. It went to the bank. You think the FBI care? No. She was a promoter. She was promoting these type of services. So not only is she going to get a civil penalty, if she goes to jail, she'll go to jail, and then she got to pay restitution, which is the civil penalty, and she'll get a criminal penalty. So found out she actually did 550, not 100. That pisses me off because I'm mad because, well, honestly, I found out before the IRS did because I have a criminal investigator who investigated and found out she did 550. That's a promoter. Actually, the 100 was a promoter. And so those are the different penalties that you can have regarding, and I'm pretty sure they probably will talk about those things on the EA exams. You got to make sure you understand those things. And I'm going to go really deep into those things once I get, when we're in Vegas. And listen, I'm with you. I don't know what they be thinking. I don't know what people be thinking that you would do that. It's just crazy that you would do 550 people. And this is the thing. One of them was in a building where all of them have a full-time job. 100 people in one building. She did one building, and she had a run or two, so she's going to jail too. But they made millions. They made millions. We haven't even finished calculating the money that they made off of this, and that's considered a promoter. And not only do you need to know it for the EA exam, you need to know it because you need to know it. If something comes up like this, like I said, with the 1099, the DIVs now, everybody's doing those DIVs. That is a promoter. The dividends, that's a promoter. All right, so let's talk a little bit about due diligence, then we'll kind of go back to that. So the next one is due diligence requirements, and everyone knows about that one, but we do have some things that people don't realize that actually are in the due diligence, because everybody want to talk about the credits. You do know if you don't give it, if your client says you did not give them a copy of the tax return, that's $50 for each tax return you did not give, up to $30,000. Same thing with, I'm sorry, it's supposed to be $60,000, not $50. It's supposed to be $60. I'm sorry, it's supposed to be 50. It's supposed to be 60, not 50. Do just like rent. I know, right? It's terrible. It's so bad. Like it is so bad. It's so bad. And you guys get them letters at the end of the year and think, oh, it's never gonna happen to me. It's never gonna happen to me. So here's another poll. For a single calendar year, what is the maximum penalty that can be imposed on a taxpayer for failing to sign the tax return he or she prepared? 10,000, 30,000, 50,000, 20,000. Let's see what everybody got. I just gave y'all the answer. Let's see what everybody said. What everybody said. 30,000 is the right answer. Now, I did mess up, and it's supposed to be $60 instead of $50 on the, because it went up this year for 2024. It went up to $60 each occurrence. So if you do 1,000 returns and you don't give them a copy of the return, that's a lot of money, up to $30. I mean, I promise you guys, it can add up. People forget about these little small ones because everybody look at the credits. So we got to make sure we really talk about the small ones. And then failure to sign the return, that's the same thing. Failure to furnish identification number, that is your P10. If you do not put your P10 on a tax return and you file that tax return, that's illegal. And we all know, I cannot think of the name of what everybody calls them when people do the tax return, don't put their P10 on it. Ghost. There you go. Thanks, Melinda. It's ghost return. That's illegal. It is illegal. Retaining copies or list of the people, the returns. Failing to file correct information. That is, so I'm dealing with that with a client right now. So I have a client who is a construction worker. So he has a lot of clients who, a lot of independent contractors who only have the TIN number, ITIN number, right? So it's about 300. No, it's because it's $150,000 penalty. This is a client. I'm just giving you an example. And so he now has $150,000 tax liability because he filed all these. I don't know if they bogus TIN numbers. I don't know, but he filed all of them. So if you file incorrect information like that, also another one is the 941s for the ERC. Think about it. If it's incorrect information, you file it, you could be possibly having a penalty. Negotiation of checks. I don't even know if we do that anymore, but I know some people probably do. That's signing the client's check. And then, of course, everyone knows the failure to due diligence regarding that $600 now per return. Y'all, when I think it was like $535, it went up to $560. Now it's $600 per occurrence per year. Child tax credit, additional child tax credit, American Opportunity Tax Credit, earned income tax credit, and head of household. Those are the ones that we need to make sure we understand what year we're in so we won't get the incorrect answer. So we're going to make sure we really dive into that on that. So I'm going to talk about that because that's one of the biggest ones regarding, and yes, the year matters, exactly. Because if you're in 2023, it was 560. 2024 is 600. 2022, it was 535. And it changes every year. Seemed like it wasn't changing every year before. It's changing every year. They're going up every year on the due diligence because that's where they see they're making their money at all day long. They're getting due diligence. All right, another poll question. A penalty may be. Can y'all read? Can they see that? Because I'm just reading it. Can you guys see the poll? I don't have to read it. Okay, good. A penalty may be assessed on any tax preparer or some good stuff right here, baby. It's a good one. It's a good one. All right, what was the answer? Everybody got the answer right? Any person who prepares and signs a return or claim for refund and the individual with the, so it's answer C. Answer C. A penalty may be assessed on any individual who prepares and signs a tax return or claim for refund. Additionally, an individual with overall supervision of that person. Oh my God, that's huge. Let's talk about that really quick. That is huge because back in the day, you didn't have it where someone who was supervising that person got a penalty. Now you do. If you review that penalty, if you assisted with that particular tax return or any tax returns, you could be liable as well as a supervisor because you were supposed to check to make sure the due diligence was done properly. So therefore, that's a tricky question because you would probably say it would just be the preparer who had the P10. And I remember I was at an event and someone said, I said, yeah, I said, the EFIN holder can be responsible too. They was like, no, only the P10 holder. I said, they said, well, I've been having people under my EFIN all the time. And that's not true. I said, oh, you've been lucky, baby, because that is true. And how about I got a bunch of EFIN holders now who have a due diligence because they check, excuse me, because they didn't check it. So that's a really good question. That's a really good question because you got to think about, you have people in your office who prepare returns and your supervisor no return because now if you are, there's no more, well, it never was EFIN leasing, but if you have people who's under your EFIN and you're the ERO and you're processing them, you're required to review them. I don't understand why people don't have compliance departments, but they don't. And so when you come to me with that, I'm going to say, where's your compliance department? Who's responsible, blah, blah. Let's review them all, and then you be responsible for someone else. And also remember who you're hiring in your company, because I'm dealing with another situation. Like, y'all know I could tell all kinds of stories. Pass a collection paper, because I'm telling you, people be doing the most. And they mad with me right now because I said, no, I'm not paying you if you don't have your due diligence right, because I know my Service Bureau ERO is going to get dinged for it. So no, I'm not paying you. Do your stuff correctly and I'll pay you. Other than that, you won't get paid. If you do something fraudulent, I'm not paying you either, because I know it was a fraudulent return. And also, people don't realize, this is just a side note, that the ERO EFIN holder owns if you don't have your own EFIN and you're under someone else's EFIN, they own those are their clients. They're not your clients. So when you tell me I can't contact your clients, they're not your clients because you don't have EFIN. Because some people really can't afford to get their own. I mean, they may have like a past, like a criminal past where they can't get it, or they haven't filed their returns or something like that. So they can't afford, they can't get an EFIN, so they have to go under someone until they can get an EFIN. But people want to own their own business. I get that. But at the end of the day, you big bossing. When when you have your own EFIN, you doing whatever you want to do. You can't be a big boss if you ain't got your own EFIN, because I'm not trying to be funny, but it's their EFIN. It's their EFIN. But y'all, that's why y'all going to be EA, so y'all don't have to worry about that crap. Yes. But let's get back to business. Okay. So next one, let's talk about all the due diligence questions and for the returns claiming ERC. I'm sorry, not ERC, earned income tax credit. So you most likely probably will have a due diligence on here. Due diligence is huge, like I said right now, because people don't understand it and people are not putting their notes in the system and people don't know about the different documentation you got to have. So you got to make sure you're looking at these questions very, 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 really, really, really honing down on these questions when you are doing the EA exam. All right, so let's talk about earned income tax credit. So everybody know what earned income tax credit is. If you have earned income tax credit client, the client does not tell you that I want earned income tax credit. You verify that they qualify for earned income tax credit. So you have to ask certain probing questions. And that's what a lot of people get messed up at, is they don't ask the probing question. The probing question would be, hey, you're trying to qualify, you have a child, that child live with you. Where's that parent? If you have a government assistance, how much you getting for government assistance? It's so many things you have to ask on these particular questions. So make sure if you get anything like that, and like I said, we'll go into more in Vegas, you got to make sure you're asking the probing questions. I know a lot of you guys have probably, been through some of my trainings or things like that. And so I always talk about this in depth. Also putting your notes in the system. Also, the 8867 is huge. People, I have never seen so many people not have a copy of the 867 in the return. I don't understand it. All right. Another polling question. To meet the due diligence requirement, which of the following is true regarding earned income tax credit worksheet and Form 867? That's a good one. Whew. That's good. That's a good one. That's a record of how, when, and from whom you receive the information from. That is huge. That goes in your notes. You say who it is. I received it from such and such person on whatever date and why, and all the questions that you ask them regarding this. What I say, and a lot of people always say, Josie, you shouldn't tell people that. You don't need documents. If you did not rely on those documents and the client told you, but you got to say certain things in the notes. Client advised me on this. Client advised me on this. I verified with client that if they get audited for earned income tax credit, they will have all the information to be able to substantiate those earned income tax credits. In certain ways you have to do that, but also you don't realize that if you have certain notes and documents, I suggest, Melinda says she suggests providing it in a disclosure statement. That's good. I like that. And also if you provide, like, for instance, I had one situation where the client provided the lease, right? Didn't need the lease, but he provided the lease. He made $21,000 and his lease was, I want to say $1,200 a month. How is he taking care of him and a child if he did that? How? So that will bring up a red flag to the IRS. And you put the lease agreement in there because you wanted to put documents in there. Don't put documents, just put documents in there. Don't do that. Unless they're gonna help you. Don't make them hurt you, and sometimes they will hurt you. And let me see. George had a question off topic. Explain why ERO should have a attorney on retainer. Yeah, because ERO should have attorney on retainer because of the fact that if you have these, well, I feel like if you have these contracts, is huge. Contracts are so huge. That's one of the reasons why I say that, because you have P10 holders under you. You need to make sure they understand the percentage of what they're getting. They need to understand if you don't have the due diligence information in here, you will not get paid. Or the fact that how you submit, if I submit the returns, if you submit them to us, the compliance department, and you don't have it correctly, we won't submit it up to the IRS and you will not be getting paid. Also, this big thing with social media now, everybody want to talk about them not getting paid, or they, somebody, the P10 holder did this, or the EPN holder did this. Things like that need to be in the contract. And also be able to, if they are in the contract, somebody needs to be able to represent you for saying if somebody defame your character. That's the big thing right now, defaming your character on social media. Understand, people, you gotta have, oh God, I can't think. You gotta have damages. For damages, you can't just go to court for just defaming your character. You gotta have damages. They gotta be, they gotta be damages. So, and also to be able to tell you how to be able to run your business as well. That is huge. But people don't realize, they don't think they need an attorney until they need an attorney. They need an attorney when they get a due diligence issue. They need an attorney when they get a criminal issue, right? So, hey, I meet them where they are. I tell them they need an attorney, but at the end of the day, I'm gonna tax you when you have a criminal issue and when you have a due diligence issue because you're not my client. And so I end up having to, you got to pay me way more money because I got to get abreast on all that stuff. Better hope to save your money. I'm telling you, hope to save your money all the time. So these are things, like I said, in the child tax credit, American Opportunity Tax Credit is pretty. I'm sorry, child tax credit and the additional child tax credit, if we still even have that, I think we still do. Those are pretty much just like the earned income tax credit. It's almost the same questions as the earned income tax credit. Then American Opportunity Tax Credit, that is where someone went to school. Everyone knows that you have to ask, and you need that 1090. What is that? 1098T. I ain't never seen so many. And don't get me wrong. If you say, most times you need a 1098T, but some people don't have that. But say it. I don't have the 1098T because I have, the clients, they have receipts and they did this, and verify that the doggone college is a true college. Because y'all don't think the IRS, I don't know why y'all think the IRS is so crazy. They're not. They'll spend $9 billion on tax preparer fraud. $9 billion on tax preparer fraud. They are not playing. And the last one is head of household filing status. So head of household is, a lot of people don't even do that anymore because they say it doesn't make any sense, but some people still do head of household. You got to verify that you are head of household, that you are actually being able to be head of a household. You are taking care of a household. That is huge. And those are questions that need to be asked about that. And then credit eligibility certificate. So you're pretty much saying you deserve this credit. And I went through everything I was supposed to go through. I went through all the notes. I went through all the information, and you deserve this credit. So you got to make sure I'm pretty sure due diligence is going to be on there because due diligence is huge. Now that's a good one because head of household, married people always do it. Everybody let me tell you, I had a tax professional who got a due diligence penalty. I looked at 2 of the returns. She files husband and wife. She files them, husband and wife, and put them at the same address and put them head household. What are you doing? What are you doing? You put them the same address and you file both of the returns. So you know they're going to ding you for that due diligence or head of household because you knew those people live in the same house and you didn't ask any questions. You have to make sure you're asking the appropriate questions. Married couples do not want to file married filing jointly or married filing separate because they feel like they're not going to get enough money and they end up filing head of household, but at least file them at a different address. At least at a different address. But you're supposed to be checking this information to make sure and also saying, are you married? Okay, if you separated, how long have you been separated? When did you get separated? You have any, that's when sometimes when a lease comes in. You have a lease showing that you're separated, that you live in a different household. But I know sometimes it's hard to do due diligence, and some people say it's just so much work on due diligence, but it's necessary because it's very necessary when you get a $60,000 penalty, or when you get right now, $30,000 penalty, $40,000 penalty, and not only that, anything over 10% is going straight up to the criminal investigation unit. So possibility you can get a criminal investigation from a due diligence penalty because they're going to send it up and they're going to verify that you didn't do anything fraudulently. And so if you did, now you really got another issue. So from all of this I'd rather just do it right the first time. But from all of this, it stems a criminal investigation. It protects you more than your client. That's right, it does. And my thing with your client is explain to them, okay, well, if I don't do all this stuff for you, if I don't put all this information in, you may not get your credit. I'm just want to make sure that you're going to get your credit. You will be able to get your credit, and you'll be able to get your money in time, and you don't have to worry about the IRS holding your refund because that's all they want, their refund. So just tell them something like that, but they need to understand that. And I think a lot of clients this year, from what I understood that it's more of preparers this year than I'm seeing anything with people just not getting paid or people not paying people or people not doing due diligence correctly, all that stuff. I'm not seeing that many taxpayers this year. All right, so we talked a little bit about due diligence. And like I said, we'll get more into that about like you know, having like notes. I mean, I'm big about notes on due diligence. I'm big about a lot of things. So Melinda has another poll. What is the statute of limitations for assessing penalties for understatement due to willful or reckless conduct? Section 6694B. Ooh, that's a good one. So these are things that are going to be on the exam. Melinda pulled these right from the exam. Oh, look at y'all. Look at y'all. Somebody is ready. Somebody ready for Vegas, baby. Yes, I love it. I love it. And that's so true. There is no statute of limitations. Don't get it twisted. So we
Josie, I'm sorry. I wanted to step in and share with everybody that the Internal Revenue Service is not only going after tax preparers because of the due diligence penalties, they're making a lot of money off of it, one. And two, they're holding tax preparers at a high regard because you are a tax professional and you can't say that you didn't know X, Y, and Z, especially if you are what was it?
What is it?
AFTR. I don't know what it is. Whatever the designation.
Yeah, it's a designation.
Whatever the designation is, you are you have to know Circular 230 to get that designation. And they also, I'm working on the case now with the tax professional, and they actually pull the tax preparers continuing education records. So we can't say that they didn't know this, and this because they got all these continuing education hours. So y'all please keep that in mind. I just wanted to share that.
That's really good because on the when you have a due diligence audit, when they go through all those questions, the first thing they ask you is how much continuing education you have. They really do go through that a lot. So that's good. Yeah. So Circular 230, we're just going to get in just a little bit because it talks about the monetary penalties and how much, you know, it charges for the monetary penalties. These are the penalties for the tax shelters issues, the unreasonable reporting income, the fraudulent tax returns, things like that. Circular 230 gets into that a lot. It also talks about due diligence. It also talks about one thing that's very important is that if the representative was acting on behalf of an employer or any firm or other entity in connection with the conduct giving rise to such penalty, the secretary may impose a monetary penalty on such employer, firm, or entity if it knew or had reasonably should have known of such penalty. That is huge because of the fact that you pretty much, like I said, we talked about that before a little bit, but I want to show you in Circular 230 what that is. You can, because it just, like I said, it seems like it's new to people that they don't understand that you can, as a firm, or if you're representing a firm, and they should have known about an issue that their tax profession was having with tax returns on filing fraudulent returns or whatever situation is, they can be responsible for that penalty. They also can be responsible for going to jail on the criminal side. All of that. Okay? Remember that. Also, the tax shelters and reportable transactions, pretty much you just, that, I feel like that's something that we represent. We don't do as much. We represent people who, you know, tax professionals are accountants or tax attorneys. So, you know, I'm on Circular 232. I have to do everything you guys have to do. And another thing about Circular 230, I don't know if I have it on here. About one big thing that I don't understand with preparers or with people who take our financial information, you don't prepare your returns correctly. I don't get that. Or you don't prepare returns at all. You haven't filed in years. You do know when there was a criminal investigation, the first thing they look at is your return. Because what does the IRS say? If you don't prepare your own returns correctly or don't prepare them at all, you'll do the same thing for a client. People don't get that. I have never understood. Every time I do a criminal investigation, I say, where's your return? I need to see a copy of your return. I need to audit your return to see if you, or my criminal investigation unit does, audit your return to see if you prepared your return correctly. I'm at an ERO visit because right now they have these ERO visits now where they're coming out to visit the electronic return originators. And so we're sitting there and he asks for the tax return. She gives it to him like it's nothing. And he says, how in the world are you have all these EFINs, all these people working under you, and you only made $30,000? How is that? She didn't put any income on the return, on the Schedule C. I don't get it. I don't get it. So that's one thing we need to think about with Circular 230. You guys know, you do know with that situation is you have to make sure you're in compliance. They want to make sure you are in compliance so that you can make sure your clients are in compliance. So with enrolled agents, and you need to be in compliance. With tax attorney, we need to be in compliance. Tax professional, we need to be in compliance with the IRS. We're representatives of people's tax documents and information, and we don't even have ours together. That doesn't make any sense to me. And even if you file it, make sure you file the correct income. File the correct, you guys do returns. And your clients will do returns. Make sure you are filing that information correctly. Because they can't say, well you be like, hey, I filed mine correctly. See, what had happened was, I'm serious. And as you take, as you study for the EA, and we go through all these scenarios that we're going to go through, because I believe in giving scenarios because I got so many. Because when you think about real life stuff, you're saying, oh, Josie said that. And this is what's supposed to be, we're supposed to do, or things like that. And even when you get out there in the real world, the same situation. All right, so this is another good one. Suspension, disbar, and seizures. They can pretty much take you away from practicing if you are not competent. And one thing about competency is the tax returns. I've seen somebody get disbarred because of that. And I'm talking about a tax attorney, not an enrolled agent, a tax attorney. I don't get it. I don't get it. Fails to comply with any regulation related to practicing before the IRS. That's pretty much, not doing what you're supposed to do. Pay somebody paid you and you didn't do what you're supposed to do. And you didn't, I don't know, they get a account levy or whatever. And you didn't do what you're supposed to do. Because some people actually do that. Y'all wouldn't believe how many stories I have. Willfully, knowingly, with intent to defraud, mislead, or threatens in any claimant or potential claimant. And that's pretty much defrauding somebody, which taking their money and not taking care of the OIC or representing them in an audit or things like that. If we're going to take on these roles, we need to make sure that we are doing what we need to do for our clients, because that's what we do. And that's why we love what we do. And as an EA, you're going to love this because it's going to be totally different than being a tax professional, but it's still a lot of work. It's going to be a lot of work, but we love it. All right, so I'm not going to, and so let's go into criminal penalties. Oh, we got 15 minutes. Okay. All right, Josie, let's do this. Okay, so criminal penalties under 7216. That is fraud penalties, criminal prosecution. I wanted to give you guys, because people do not understand what I'm saying when I say you can go to jail. You can go to jail for preparing a return correctly, multiple returns incorrectly. Like I said, I have people, you could be sitting by that person, don't know they're on a criminal investigation and they're one of my clients. Because a lot of people right now on the criminal investigation. And because of, with criminal investigations, it's because of the tax return preparation, preparing information incorrectly, giving incorrect financial information, or not only that, let me give y'all an example. Have a client right now who a P10 holder under her filed 71 returns. About 71 returns. The biggest one was $80,000. The person got a refund for $80,000. The preparer received $40,000. So the other one was $60,000, $40,000, and she received half, or he received half of all the money. You guys know what time that is. That is that. So we just finished the investigation on the returns. $1.2 million in prep fees in 3 months, because we shut it down because we did when one went through, one did go through. We shut it down. It was like, I think that's the one, it was like $60,000. It was $40,000, because it was ended up being, she got $20,000. He got a $20,000 tax prep fee. We found out, we shut it down. We shut them down. And so this is the thing. How are they even getting those type of returns? They're not getting those type of returns. That's fraud. Let me tell you what the person did. The person would take a Schedule C return, and they would say that person, they would say that person did estimated taxes of $80,000. I mean, paid into IRS estimated tax of $80,000. So the person didn't have any tax liability. They paid $80,000 into estimated taxes. What they get back? $80,000, right? That's how the person did on all the returns. That's how they would end up doing it. The software, their software lets them change those type. Yep, it did. And the bank let one go through. I don't see how that happened. But one of the banks let one go through. And now she coming, keep coming us talking junk. But you were under somebody else's EFIN. You had your own EFIN. I don't care what you do. But you didn't have your own EFIN. So therefore, that person would be in trouble because it's under their EFIN. And so that's not, we're not playing that. And so you going to jail. And we sending it up to the criminal, we're sending it up to the IRS. We're doing that 14157, whatever that when we're sending it up. And we're going to respond back to all the clients and let the clients know that they're either going to amend their tax returns, and if they don't want to amend the tax return, or provide us documents, because if they truly did estimated taxes, we'll send it up. But if not, I'm going to send that tax return up too and say this is a fraudulent return. That's what we're supposed to do. We're going to fix this industry, period, point blank. And it doesn't matter. But the reason why, because I'm sick of us getting all this and going to jail. I don't know if y'all go on Department of Justice website all the time. I think we talked about this before. Go on there and look how many tax professionals all over the world that file fraudulent returns, and now they're in jail and has to pay all that money back. $1.2 million back, and she's probably gonna do 3 years in jail. And she didn't get any of the money. But just because you did not get any of the money does not mean it's not under the controversy. It's still under the criminal bylaws. I mean, the criminal law says it's because you tried to defraud the IRS. You didn't even get the money, but you tried to defraud the IRS. Therefore, you are still responsible. So, disclosing or use of information, knowing or reckless disclosure is up to 1 year imprisonment. That's knowing that you put something, it was disclosed, you put something in there incorrectly, recklessly, you can go to jail for 1 year. Willful preparing of false or fraudulent returns is a felony up to 3 years. That's over a certain amount of money. A misdemeanor is 1 year. And then the promoters that we just talked about is 3 years, period. If you are a promoter of PPP loan, ERCs, DIVs, fuel credits, I got one now, I got a solar credit. If you are responsible for all those things, and this is the crazy thing about it, people actually put it on social media. Y'all don't think the IRS checks? I do. Look, I have my Moscato Diasta right now sitting up there waiting for me because these folks crazy. But that's what I chose to do. I chose to do it. I love what I do. I love getting, helping people out, getting them, minimizing their sentencing and things like that. Because sometimes people are not guilty. Everybody's not guilty. And my thing is, it ain't my job to judge you. My job is to defend you. And that's what I try to do. But the promoters, they're really, really being hard on the promoters. So you may have a question on the EA exam about promoters. So you need to make sure, because you guys know during the COVID, and that's what the presidents are talking about right now is getting that money back from the COVID relief, because they got so much money. People became millionaires doing COVID, promoting, and you promote it on social media. Do you not think that the IRS checks your social media? Every ERO visit that I did this year, they told us about the social media. Every criminal investigation I did this year, they told me about social media. They pulled social media and they said, how are you going to say your client not doing ERC when that's what they were saying? You can come back and get employee retention credit from me, or they called it like another one they did, the 7202. The what is that? The COVID relief, where you, if you were sick and you had a business, you were able to get that. Yes, the sickness, yes. That's big. I got one client who did 800 returns in 2021, and he has 500 7202, and all of them the max. What was the max? Was the max 10,000 or the max was 3,600? What was the max on that? Every client got the max, but there is no notes in the system that says how many days that person was out because of their children or whatever that situation is. And you know that form asks you how many days you were out of your business. And 500 returns. We have to go through 500 of that person's returns and try to see if we can amend them or figure out some kind of way to get, and the max was 10. Thank you. The max was 10. All right. So Melinda has another poll question for you guys. Thank you. The max was 10. Mm-hmm. Mm-hmm. How did y'all do? All right. A. Whoo. I am so proud of y'all. 6 years, well, you don't have to, but 6 years is, the fraud thing. So, I do recommend 6, but for EA purposes, you gotta say 3, or you're gonna miss it. All right, I'm almost done, you guys. We got 6 minutes. So, the last one is fraud and false statements up to 3 years. This is where it comes in on the offering compromise. Oh, and I was about the closing agreements. Closing agreements, that's when the tax, you're saying this is what I'm agreeing to the tax liability. This is what it's supposed to be. Things like that. If you put fraud or false statements on those as an EA agent, because you are the ones who do the OICs and possibly the tax, you're doing audit or whatever, you could have up to 3 years in prison if you put that information in there. When I found out about the OICs, I was like, "Ooh, what? They doing all this on OICs?" But they are. And you can get a civil penalty as well for fraud and false statements if you know the information is wrong on the OIC. Because you're getting financial information, you're getting bank information, you're getting property information, all those things you're getting from the client, you have to verify those things are correct. Oh, I'm done. I know what's next. Okay, so I'm done. Anybody have any questions for me? We're gonna deep dive. It's gonna be good, y'all. I can't wait to do Jeopardy on this. I'm gonna give some good scenarios. Anybody have any questions? Any questions? All right. No questions. Thank you, guys. No questions. This is going to be really good. I cannot wait. Y'all know that's kind of, and I'm going to do a couple of other things during training, but this is my baby. This is what I do all day, every day. I didn't kind of got out of doing any resolution, so I'm going to be moving them over to y'all, like I said. So y'all better come on. TikTok penalties. George, really TikTok penalties? TikTok. They going ham in them TikToks. They going ham on y'all see me on Facebook? I ain't gonna go there. I ain't gonna talk about that. Jesus. They put me out there on blast. But anyway, like I said, You can put me on blast how you want to. We cleaning up this doggone tax industry. All right. Let's go and talk about this. What we about to do in Vegas, y'all. Oh my God, this is so amazing. I hope everybody has signed up. Hope everybody got their rooms. This is huge. Melinda, do you want to go through this? You want to go through this for me? I know you got some background. No,
you can do it. It's just my background loud.
You know, you all in mode and stuff. Look, she probably somewhere on the beach laying out with her swimsuit on. I'm mad because I'm at work.
You already know.
I know. See them? I should have became an EA instead of did that doggone tax stuff. This is too much. A tax attorney. So we have 3 days in Vegas. Melinda has planned an amazing trip. This is gonna be good. So you are going to be staying at an amazing resort. Y'all know how Melinda, she bougie, baby. She bougie. So we're gonna stay in an amazing resort, and then, but you also, what you're gonna be getting is you're gonna get some good stuff. Y'all have heard everybody talk about different things. We still got some more class to go through, and these are your instructors. So look at the amazing rooms. You know, I tried to be a little bougie, but I couldn't be that bougie, but I did give me a good room, baby. I was like, I can't wait. I'm so excited. But this is where we're going to be at. I cannot think of the name of the hotel. I'm sorry. But y'all got the link. You got the link about it. But this is the hotel. This is massaging like, oh. And
it's Aria.
Okay. Thank you. Do we have a video?
You can skip the video. For some reason, it's not playing.
Okay. That's probably just me. All right. So let's talk about what's included. The EA review. Access until you pass. Man, that is access until you pass. That's amazing. Online courses, all 3 parts of the EA exam available. Study guides, video lectures. You have us, unlimited EA practice examinations. That is big. That's huge. Advanced learning, study anywhere, online, instructors with support. You got all this stuff. This is huge. This is $699 value. Ooh, that's good. Okay. They don't get that stuff like that for the bar. What's included? Access to you. Yes, right. Access till you pass. That's some good insurance right there, baby. I'm telling you, that is good. Set goals. We're gonna do it. Digital flashcards, licensed instructors. I'm one of them instructors. George, Melinda, LaShondra, all of us. And their EAs, amazing EAs, practice. That's what they do. Me, tax attorney, that's what I do. I practice. So that's why they got me doing, some of the due diligence stuff. That's what I do. Live Jeopardy, that's something I'm so excited about right now. Live Jeopardy, I can't wait. Facebook group is off the chain. It's really good. You can ask questions, and we're gonna have that Facebook group. The cram course in December, no charge. So you come in June, and you have a crash course in December. Discounted room rates. This is good. Group rate. I'm sorry, discounted group rates. I'm sorry. We use Fast Forward, EA Smart Bundle, career opportunities, because I told y'all, like, that's all I hire is EAs. I have 2 right now. I don't hire nothing but EAs. I hire EAs before I hire tax attorneys, because EAs can do a lot more than a tax attorney can do. They really can. Mentorship, and like I said, EA, we don't prepare returns. I need somebody to review a return and tell me it's not right, or tell me it's fraud. And can't nobody do that but a person who prepare returns, and most of them are EAs. And I have to have EAs because they need to be able to talk to the IRS. They be able to represent people according to the IRS. Okay. So registration today, total investment of $1,995. And we all know that's a tax deduction. Everybody know that. Discounted group rates, 5 or more. Melinda can tell you a little bit about that. Discounted hotel group rates. Y'all, where we staying at, and we talking about $200 a night, a little bit more if you're a little bit fancier, that is a good rate. That is a really good rate. And then the EA cram course, and then pay vacation, yeah, because that's what I'm using it for. I'm trying to get my husband to go with me so we can do a little gambling and stay a little longer. But we'll see what he says. But also Fast Forward EA, that's the one, that's what we're gonna use. And you get it because it's tax season. That's right. Exactly. He might as well come on go with me, but he ain't trying to hear that. He's trying to stay at home, but he gonna go. So the total investment is $1,995. That's all. So sign up today. Do we have a link that they can sign up, Melinda? Today, if you have not signed up, hope everybody signed up. And I cannot wait to see you guys in Vegas. I think we have, how many more classes do we have? Thank y'all for coming on at 7 instead of 12 today. I appreciate that. Because y'all know, I'm trying to be a partner in the daytime. So things have to work out. I didn't even do my group last night so I could be here because I love you guys. I love this so much. Did we put the link up there so everybody can make sure you have it? Or I guess you can send it out as well. Oh, there it goes. There it goes. There it goes. Also, don't we send out a copy of the class tonight? Okay. We send out a copy of the class, not tonight, but whenever she sends it out, you'll have a copy of this as well, just in case you want to go back and review it. But I will see you guys in Vegas. Vegas. I cannot wait. I think I have one more though in the class. Oh yes, she'll be emailing to everyone. Melinda, do you want anything to say? George, LaShondra, y'all got anything to say before we go? Nothing? All righty, you guys.
I just wanted
go ahead.
to thank everybody so much. Thank you all. Go ahead, Doc. I'll let you go first.
I couldn't just let us go without saying that because I missed the last two. I've been busy, but look, I'm looking back through this value and I'm stumped by this. I'm gonna have a conversation with Melinda about this pricing here because
me too.
Clearly she's doing some charitable donations.
Yes, right.
But no,
y'all better come on.
I think I saw a correspondence that there were like less than 20 rooms left, and with the number of weeks we have dropping these classes and everything, guys, ask yourself what your why is, because you're gonna need to know what that why is and make this commitment and understand that this is not about getting you to come to Vegas, that we are supporting you throughout this thing because we want to see you win. When you get into this community, oh, it's a whole different level. But that's all I had to say about that.
Yes, it is. They making big bank over here, baby. Over there. Now I'm talking about the EAs. Y'all making big bank over there. Melinda?
We are, and that's what I was getting ready to say as well. We have less than 15 hotel rooms left. So if you're serious about becoming an EA, I highly recommend you going ahead and sign up. Also, I wanted to drop, if you are okay with making $550 or up to $1,000 per client, that's okay. Everybody don't have the same goal. But for those of you that are interested in making $5,500 per client, you're on the wrong side of the field. I don't know a tax preparer, and I've been a tax preparer. I was a tax preparer for over 15 years, and unless it was a really big corporation return, making $5,500 per client, I just didn't see that in my future because I couldn't see this far until I became an enrolled agent. $5,500 per client for me now is a low end because we are grossing some of our client fees are 6 figures per month or 6 figures up front, or they're making $10,000 to $20,000 monthly payments and they are a 6-figure client still. So whatever your goal is, if it's more than making $55 per client, I suggest you get real serious and buckle down this summer, study, and join us on the good side.
Yes. I agree.
I want to add one more thing too, because this was on me earlier today. Because the money's gonna do what the money's gonna do, what have you. And I know that a lot of people, no judgment, a lot of people enter this industry for the money, and this may appeal to you for the money. But I don't want you to think it's easy. And again, ask yourself your why, because when you get to that level of commitment and work for the money, you're going to need to be reminded of it sometimes. So, I mean, I don't want you, y'all see, some of us like doing the travel and whatnot during the tax season and think, oh, that's the life. But understand on the other side, we're completely geeked out. We read tax code like y'all watch reality TV. So you got to be ready for that next level. That's all I have.
That's true. That's right. That's good stuff. All right. I thought she was on here. I don't know if she may not be on here. I thought she was on here. All right. All right. Thank you guys so much for tonight. Melinda, I'm sorry. Go ahead, Melinda.
Nope, I was just getting ready to thank everybody as well, and we will see you all next week on the next masterclass.
Yes.
Thank
bye.
you so much, Josie.
You're welcome.
That's
You guys have a
good.
great one. All right.
Good night, everybody.
Good night. Bye-bye.